Good morning and welcome to another edition of Join the Dots Gold. So today I'm going to dissect an interview by, I think it's Kitco and Willem Middelkoop, a very, very sound Dutch gentleman who's got great experience in the gold market. Okay, so I'm going to run through his interview. I'll link the interview, of course, and I think it's 26 minutes. I'll try and run through it in this one presentation. So he says, if you think about it, and this is the thought, again, we have to think. If you think about it, central banks are printing money to buy gold. Well, they are, aren't they? Especially in the East. They're actually printing money to buy gold. So it's a self-fulfilling prophecy that gold will go up and the money supply will go up. And as we explained in the last two videos, the money supply has increased 55 times in the last 45 years. So why wouldn't gold be a lot higher than it was in 1980? Central banks are admitting they can't stop the rot, so they're taking on gold as protection. And this is what I've said before as well, it's protection. And they need a different asset class than treasuries because they've got a war, effectively, a trade war, a philosophical war, an ideological war, loads of wars with America, the West. So the last 3 years has seen 1,000 tonnes per annum bought by central banks. 1,000 tonnes. And remember, China is the largest miner of gold in the world at 318 million tonnes. And, sorry, 318 tonnes, not million tonnes, 318 tonnes per year. The largest mine, and they never sell anything. They never sell anything. Now, even in Holland, where Willem comes from, the high net worth and the ultra high net worth people have invested 1 billion in gold in the last year. 1 billion. Even in Holland. So he raises his eyebrows as he says, this won't slow down. And it's not even the economy yet that's driving it. It's just the money supply, the fear, the wars, the obvious chaos that is underneath what is a pretty rough surface anyway. So it's the monetary, the fiscal and the geopolitical situation that's driving the price. Join the dots. All those things we've talked about since I started this service. Geopolitical, monetary, financial, ideological, wars, chaos, police lying about how many attend a protest when it's clearly obvious that it's a lot more. Fake videos put up by the police. Chaos. So it's all pointing to more chaos, more uncertainty, and thus more flight to hard assets. That's when the people rush to hard assets, when they're scared, okay? And gold, silver, and Willem says Bitcoin. Willem likes Bitcoin. So he doesn't see my fear on Bitcoin, which is that the governments of the West will turn it off at some point because they can't control it. And this war, this ideological war going on, is all about control. And so is the CBCDs that Europe wants to bring in, CBDCs. And so are the stable coins that US banks are going to use, backed by treasuries, which gives treasuries a purpose. And then the American government has given up total control over the financial system. It's all down to the Fed, which is exactly what the Fed wants and what Trump says that he doesn't want. But does he really? Is Trump really telling the truth? I don't think so. So Willem sees them as a hedge, as I do with gold and XRP. I see XRP as the most likely to have a better risk-reward profile than Bitcoin. I might be wrong. I might be wrong. Okay, and he says that at the core of all this is bonds, which we know. We know that the debt market is exponentially bigger than the equity market, the share market. Okay, it is. We know it is. The numbers tell us it is. So it's the bond market that will drive everything. I call the equity market the clown. It's there to entertain you. It's there to distract you. When do they send in the clowns in a circus? When something goes wrong. They send in the clowns to distract you, to keep your attention away from what's happening. Maybe a lion's broken loose or something, whatever. That's why they send in the clowns. Very good record. Right, 9 to 12 minutes. Last 50, 60, 70 years, safety was in bonds. Quite right. The last 50, 60, 70 years, the safety was in the bonds. Now it's not. In fact, the bonds are risky now. So all that 50, 60, 70 years history has got to change. So we see, and I see, personally, I see derivative positions moving to bonds because they're scared of all the derivatives they've created which they can't control. And especially as we go into chaos. What value has a derivative got? What liquidity will that market have? I see, and this is me, not this is Willem talking, I see money moving to US Treasuries at the moment out of derivatives because those derivatives have no real value when there's no liquidity. And the liquidity is draining. Okay? And of course, the real money is going into tangible assets, gold, especially on the eastern side of this world. So soon, when stocks sell off, the majority of stocks, then bonds, when rates bottom and turn higher out of credit fear, will flock to gold. Yes, because at some point, and we saw it in Mike Maloney's presentation yesterday, the Fed will drive rates down. But at some point, there will be no demand for the bonds and rates will start to rise. And that's when the real rush comes to gold, because that's when the chaos, fear, panic crystallizes in higher rates, not lower rates. At the moment, they can buy time with lower rates. They won't be able to buy time once rates bottom. Sovereign bond market is 50 trillion of 100 trillion debt in total. 100 trillion debt, much bigger than the equity markets. Okay? So if 5% of that moved to gold, if 5% of that 50 trillion, what would the gold price be? There's no spare gold. There's no spare silver. So as the money looks for it, the price has to rise. Okay, and that gold trade, although we've moved from 1254 when I first saw this, and we've moved up to 3.6, it's not mainstream yet. The investment advisors, the fund managers, they're not really mainstream gold investors yet. They haven't started. And when they do start, there ain't going to be a lot around, is there? There ain't going to be a lot of spare. So when they do start, woof, parabolic. So all US and EU pension money has to move. Some of it has to move. And a lot is not allowed to buy gold and crypto yet. It's not allowed to. So Willem sees this, and I've said it before, is the first inning of the game. Remember, baseball, 9 innings. 9 innings. This is only the first innings. This 100% move, 200% move from 1254 to 3.6, first or second inning maybe. Only US, UK, French, etc. governments' course is to keep growing debt and printing money. That's all they can do. They have no other option. More and more sovereign and institutional money is understanding this, hence the Saudis, hence other countries, Turkey, Iran, other countries are buying gold. Poland, they're buying gold. Dutch billionaires, they're buying gold. So logic says this will all increase the flight to gold. His fund started in 2008 with 2 million Canadian, and it now has 250 million Canadian. The divorce of the West and the BRICS leads to more need to mine in the West. And yes, it does. There's going to be a huge amount of investment in mining companies in the West because they need to gather, or they need to protect their own supply source. Okay? But this isn't going to affect the miners, except in a very, very positive way, because people will want the mining shares. In my view, this isn't Willem, this is me. In my view, they will want the mining shares because the mines will become so liquid with money pouring in to create new reserves of gold, silver and all the other minerals that the West now needs, but probably or possibly can't be bought from the East. 50% of his fund is precious metals, 50% is in critical metals, uranium, etc. I would put silver in both. It's critical for its need in missiles, in EVs, in solar, ESG, all electronics. I'd put it as critical and precious. And he says, as with the end of the Roman Empire, stupid stuff happens, i.e. Trump pushing India into the Russian and Chinese arms rather than embracing them and using them as part of the West. And India, I think, is a real pivot. It's a huge economy now. It's a massively growing economy. And it's very central to what's happening. So he said it adds to a bipolar world. And this is a thing I haven't heard mentioned for years now, the peace dividend. Do you remember we had the peace dividend when the Soviet Empire collapsed? 89, I think it was, and the wall went down. And everyone said we had a peace dividend. In other words, governments didn't have to spend as much money on war, on military. Europe particularly took that route, didn't it? And it relied on NATO and American money, despite the fact that it was closest to the possible war. And it spent 20, 30 years spending very, very little on defence, which really annoyed Trump, because it should have been 2% of their GDP spent on defence. And they didn't. They didn't spend anything like that. Now they're having to. So the peace dividend has now turned into not a dividend, is it? It's a cost. Okay. China had massive spending on infrastructure, manufacturing equipment, colossal property development. Both of those dividends are finished. Both the peace dividend in the West and the China growth dividend for Japan, Australia, other countries in that area, that's gone now. They're not growing. 17 trillion of local government investment vehicle debt. No cash flow to repay it. So simple. No one's talking about it. It's so simple. $17 trillion worth, not one, dollars. So countries are now starting to fight over very limited reserves. They want their own mines. Western economies are decoupling from China and building their own commodity structures, as they are in America. And there is a value in America because there's a massive amount of minerals in America that have never been mined because of ESG, particularly in the last 20 years. That is going to reverse. There's going to be colossal money, colossal investment in mining. Forget ESG. Forget it anyway. It's a joke. Do the real science. Go on to some sites that tell you the real science. Another corporate fascist move by the elite. So the awareness and valuation of commodities in the ground is increasing. But family offices still have less than 1% in commodities, gold and silver. Family offices, huge market, has less than 1% in gold, silver, commodities. So history is a massively strong bull market. Right, I'm going to end it there. There is more, but I know I'm running out of time. I'm being told I'm running out of time. Okay. It's a one-way journey. Yes, you'll have trading up and down, $100 here, $100 there. We're seeing it at the end of this week. Okay, but gold was 2.6 last Christmas. It's 3.6 now. Christmas came early for those who saw it. Thank you very much.